My dear friends, welcome to Rajashekar classes. This is lecture number 82. In this lecture, we will try to understand indicators for technical analysis of stocks. In stock market analysis, indicators are tools used to evaluate and predict price movements based on historical data such as price, volume, and open interest. These indicators help traders to make informed decisions by identifying trends, momentum, volatility, and market strength. These indicators help in identifying potential entry and exit points for traders. Technical analysis relies on various indicators to help traders to make informed decisions about stock price movement. Let us try to understand these indicators. First one is trend indicators, second one is momentum indicators, third one is volatility indicators, fourth one is volume indicators, fifth one is support and resistance indicators, and sixth one is market sentiment indicators, seventh one is breadth indicators. Now let us see one by one. Anyway, we will discuss all these indicators in detailed manner in future lectures. Just in this lecture, let me give a small overview on all these indicators. What is this trend indicators? These help identifying the direction and strength of a trend. Yes, what is the use of these trend indicators? They are helpful in identifying direction and strength of a trend. For example, moving averages, smoothers price data to identify trends. What are the moving averages? In simple manner, I can say simple moving average. You might have heard about it. Example is SMA. SMA means what? Simple moving average. Even you might have heard about EMA. What is this EMA? EMA means what? EMA means exponential moving averages. Anyway, I will discuss all these things in future classes. Second one is average directional index, ADX. It indicates the strength of a trend. Probabilistic SER. It is useful for stop and reverse. We will see. This is one of the important indicator, Ichimoku cloud indicators. Anyway, I will discuss this one, moving averages indicator, Ichimoku indicator. In moving averages, I will discuss about SMA. What is my SMA? Simple moving average. EMA means what? Exponential moving averages. I will discuss all these things in future classes. Then what about these two, ADX and probabilic SER? We will see, depending on requirement, we will see whether to discuss about these red color indicators. But certainly we will discuss which one we will discuss. We will discuss this one. What is that? Moving averages. Moving averages in the sense, as I told you, simple moving average, exponential moving average, and Ichimoku cloud indicator. We will see how will it be. Momentum indicators, these measures the speed or strength of price movement, isn't it? It measures speed or strength of price movement. For example, you might have heard about RSI. RSI means what? Relative strength index. We will discuss about RSI in future classes. It identifies overbought or oversold conditions. What is the purpose of RSI? It is useful to understand what is overbought and oversold conditions. Anyway, it ranges from 0 to 100. Values above 70 indicate overbought condition. Below 30 indicates oversold conditions. It is useful for identifying overbought or oversold condition, as we discussed. Stochastic oscillator, I will discuss all these things in future classes in detailed manner. Stochastic oscillator compares stocks closing price to its price range over a specific period, and MACD, moving average, convergence and divergence. It shows trend direction and momentum. Rate of change, ROC, it measures percentage change in price over set of time. This Williams percentile, or this we will see depending on the time, but I will discuss all these indicators in our future classes. What about third one? Third one is volatility indicators. These measures the rate of price changes. For example, you might have heard about Bollinger Bands, consist of moving average with upper and lower bands to show volatility. We will discuss this. What is this Bollinger Band and average true range (ATR)? It measures market volatility by averaging the true range over setup period. Isn't it? There is something like Keltner channels. These things we will see in future classes. There is something like volume indicators. These track trading volume to confirm price trends or reversals, shows the strength behind price movements based on trading volume. Volume indicators, this shows strength of price movement based on trading volume. First one is OBV, on balance volume. It tracks volume flow to predict price trends. And another one is I can say CMF, means check-in money flow, and VWAP. What is VWAP? Volume weighted average price. A&D line. What is this A&D line? Accumulation distribution line. That A&D line is known as accumulation and distribution line. Anyway, we will discuss. There is something like you might have VWAP, that is volume weighted average price. We will try to understand about all these indicators in future classes. Another category, fifth category, is support and resistance indicators. They highlight key price levels where reversal or breakout may occur. These identify key price levels where buying or selling pressure is strong. There is something like you might have heard about pivot points, Fibonacci retracement. I will discuss all these things. What is a Fibonacci retracement? Identifies potential support or resistance level using Fibonacci ratio. Pivot points means calculate key levels based on previous highs and lows and closing prices. Anyway, I will discuss these trend lines we already discussed. What is this? Another category is market sentiment indicators. What are the put call ratio, fear and greed index, volatility index I already discussed. We will discuss put and call ratio, fear and greed index in future classes. Breadth indicators. What are the breadth? These measures the market participation and strength. Advanced decline line, Maxwell oscillator, and arms index trend. All these things I will discuss in future classes. For effective analysis, combining multiple indicators in the sense trend plus momentum often improve accuracy. Isn't it? Common strategies combining indicators. There is something like golden cross, death cross, that I will discuss anyway in future classes. Combining multiple indicators for confirmation, something like RSI plus MACD. Avoid relying on too many indicators to prevent conflict signals. Use indicators that align with your trading style. For example, short term versus long term. Technical indicators are most effective when used together to confirm signals rather than relying on one tool alone. Successful analysis often combines trend following, momentum and volume based tools with risk management strategies for optimal decision making. Thank you very much.